Ladies and gentlemen, good morning, welcome. 女士们、先生们，上午好。首先感谢大家还是周五准时出席今天的投资论坛。我们相聚在这个收获的季节，也是多伦多最美好的季节。我看一下这边字幕在打哈。So we have an English translating showing there. 所以在多伦多其实华裔的商圈非常非常活跃，特别是走出疫情的这段时间，几乎每天都有活动。那如果在这个论坛当中你们有机会碰到一个认识但是很久没有见到的朋友，这将是一个非常好的运气 bonus。那这种缘分叫同分会我们有同传度，也有同分会。那么今天我相信你们有机会也是在这儿认识新的朋友，下一次就是你们的同分会的缘分。那么今天的这个缘分呢，缘起是由新动力集团主办的3天秋季经贸高峰论坛，今天是最后一场，是新时代的投资趋势分论坛，由新动力和家中金融协会 CCFA 联合主办。感谢今天的分论坛的赞助商方泰集团。那我是家中金融协会的主席 Emily， 也是今天的主理人。再次欢迎大家，也谢谢，希望大家今天有很好的收获。那么我今天站在这里参与、组织并主导这场论坛，其实有2个地方，我觉得还是要说一下，非常骄傲，凡尔赛一下吧。第一，我是代表成立了22年的一个专业的华裔的这个协会。那么这个协会呢，主旨是建立强大的金融专业人士和学者的网络。比如说我们今天请来的几位 speaker， 那至今呢有近5000名的 followers。作为专业的桥梁， CCFA 是聚焦行业的标杆，促进商业投资的契机和联动，专注业界的专业性、实践性和先进性。在过去的20年里，一直处于在前沿，组织的大量的金融论坛、沉浸式的教育研讨会，促进家中2国业内的人才交流和专家对话，也提高了人才本身的这个素质。那 CCFA 促进的不仅仅是商业交流，而且有族裔文化的理解和融合。那么嫁接加拿大本土的和中国的金融资源，为加拿大吸引并留住移民金融人才贡献力量。那我要凡尔赛的第2件事呢，就是因为在多伦多这样的地方，可能加拿大就是多伦多是唯一的有这样的一个分会，能够聚集各方的主流专家。那我个人参会代表了从业26年的金融专业人士，6年的移民。3天的这个论坛，主办方汇聚了教育、经贸、消费零售、投资各领域的业界大拿的佼佼者，对接的呢是一流的资源和资讯。看到参会的华裔的这些行业的精英领袖、新动力的企业家们在座的，人才济济，平等坦诚的交流，洞察新时代的趋势，毫无保留地分享行业的智慧，抱团学习求发展，为华裔社区的影响力添彩，这件事很值得骄傲。那此刻今天我们齐聚一堂，探索的是投资趋势和投资的话题。话说今年不太平。那投资金融界这几年的主持人开场白都是说不太平，因为市场好像野生动物园，随意的放飞黑天鹅或者灰犀牛出来走走首先那个地缘政治紧张的局势，俄乌战争的硝烟还没有，现在巴以冲突又开始升级了，影响了市场和投资者的情绪，也增加了金融市场的不确定性和大量的波动。其次，高通胀以及其导致的这个经济衰退，是今年所有大行都在说一个令人担忧的话题。那经济衰退好像狼来了，到底来不来？怕来，更怕拖着不来。 那持续的高利率和货币的紧缩，让所有人的口袋都变紧了。劳动力市场的数据和美联储央行要宣布的加息到底是什么关联？投资人的信心怎么来挽回？你的资产配置有效吗？在这样的情况下，大家寻求在这个环境当中做出非常理性的判断。第三，一边世事非常纷乱，另一边太多的新生事物又好像给人带来希望。继 Meta 之后，今年的 AI 主题 NVIDIA 为首的6到7只的这个科技股票带飞了纳指。那英伟达是概念股吗？那 AI 有泡沫吗？市场完全定价了利好吗？那到底我们应该是基于人工智能，既然这么强大，人工智能的定量去建模投资呢，还是去投资可持续的 ESG 呢？那在纠结 ESG 有没有回报的时候，其实机构已经跑步入场了，资金不断的在向 responsible investor 负责任的这些投资去倾斜。2022年全球 ESG 的基金市场达到了1.7万亿，是比去年增加了整整29%。另一项得到投资人青睐的趋势是 alternative investment 另类投资。过去的1年，金融界正在见证另类投资策略的激增。据说2025年将占据全球可投资资产的1/4。这对于加拿大的投资人来说又意味着什么呢？那我们有什么可以投的呢？此外，对于中国的增长率一直是投资界最关注的问题。中国跑得太快了，我们担心；跑不动了，也担心。在全球经济面临挑战的同时，那中国又将怎样去展示它的韧性和潜力呢？这么多的问题，我没有答案。面对复杂不确定的、不断演变的市场环境，我们今天一起来探讨。总是有挑战和机会的，那我们听听专家，留给专业人士。那听专业人士怎么说？就像我们使用那个厨房设备用到方太，我这边植入一下赞助商，谢谢赞助商。今天的嘉宾也都是加拿大投资界的专业大拿，并且在美国、加拿大、欧洲、亚太市场都有着丰富的经验和权威，那一定会给大家全方位的启示。我们在2个主旨演讲之后呢，也会有开放式的讨论的机会。最后，预祝这次经贸论坛投资峰会红红火火，热度持续，商机不断，留有余味。那谢谢大家。我们首先要请出的第1位主旨演讲嘉宾是先锋集团的 Vanguard Group 加拿大投资策略总监 Bilal Hassanji。他来发表一下权威的宏观经济报告以及市场的解读。Bilal他是在加拿大是负责先锋领航集团的所有的投资策略的发布。那么他本身呢也是在很多的这个机构有20年的专业的这个经验，他在 CIBC、HSBC、Standard Chartered 也是做专门的研究。那么先锋集团也让大家知道是全球最大的基金 ETF 公司之一。那我们有请 Bilal。Thank you.
Good morning, everyone. Thank you very much for attending this session. Really appreciate your coming here for today's session. So, as I could read from the AI translation that Emily was talking about, a lot of themes about monetary tightening, about interest rates, and how it's impacting the economic outlook for global markets. So today's session is going to be based on, we are going to talk about the Canadian economy, the US economy, given that I've been allocated only 20 minutes, so I'll keep it brief. We'll also talk briefly about global economy, Chinese economy, Europe, and emerging economies. And then we'll spend more time on investment implications, i.e. how and what investors can do in terms of implementing various strategies based on the economic outlook that we foresee. And then I'll be more than happy to take any questions that you may have. So starting with the Canadian economy, so we believe that Bank of Canada has reached its peak of interest rates. It's not going to raise any further, barring any unexpected spike in inflation, which has subsided a bit. There was a slight surprise in the last reading last month, and after that, like Bank of Canada still decided to pause on its September 6th decision. So in our opinion, that's because Bank of Canada sees that the effect of monetary policy on the Canadian economy is seeping in. It is having the impact, the desired impact that it was looking for. And the only challenge that Bank of Canada right now facing is still a very strong job market. While it's a mixed blessing in the sense that it is helping Bank of Canada, allowing the flexibility that it requires to maintain a tighter monetary policy, because as a central bank, the key function or a key target that Bank of Canada needs to achieve is to balance the economy in such a way that it achieves a low inflation target of 2%, but at the same time, it also needs to achieve optimal employment levels. So, and then balancing growth as a result of that. With that in mind, with interest rates at historically high levels, and it's not just high, it's also the velocity of like how fast they move the interest rates over the course of last 18 months. That would not be possible without a strong labor market. The reason for that is when central banks raise interest rates, the immediate impact is that businesses start cutting jobs, and that would have a detrimental impact on the economy, and that could push the economy into a recession. The cushion that Bank of Canada, and to that extent also the US Federal Reserve, that they have right now is like because of strong job market, they can keep interest rates higher for longer, and at the same time possibly achieved a soft landing into lending of the economy. So with that objective, Bank of Canada has stopped raising interest rates for now, as they said in their recent statement after September 6th rate pause, that they're going to be data dependent, but at the same time, the language in the messaging was hawkish. It was a hawkish pause, and they basically were very clear that in case inflation surprises on the higher end, they'll be willing to go back to rate hikes. Now, there's another aspect that Bank of Canada has one more challenge that the US Federal Reserve does not necessarily have right now, and that is the indebtedness of the Canadian households, and in general, the indebtedness. So Canada as a nation has the highest debt to GDP ratio within the OECD countries. And our balance sheets as average Canadians are extended. And that has been because of very high real estate prices, and we'll talk about it in a bit as well. So that because of that challenge, the capacity of Bank of Canada to keep raising interest rates is limited. Whereas on the US, and I'll come to that in a second, but in the US, our view is that the US Federal Reserve is going to raise interest rates at least between 1 to 3 times. So although they paused in the last meeting, but they're going to raise interest rates until they reach their peak. So our scenario for US interest rates is that they're going to keep the interest rates on pause for now, but eventually they will resume rate hiking, and they will peak at about between 6 to 6.25 sometime in 2024. So this is our overall scenario. So Vanguard looks at both economic and markets as a matter of uncertainty. So we never give a point estimate that we expect, let's say, a 6% GDP growth, a 5% GDP growth. We look at different scenarios. So our median expected scenario, most probable scenario, is that the Canadian economy is going to get into a recession sometime in 2024. There is also on the upside, there is like a significant probability that we may also be able to achieve soft landing, but on the downside, it may be a deep recession. So there are like three different scenarios that we foresee, but at the same time, majority of our forecasting scenarios are saying that we will be like going into a recession, a mild recession, sometime in 2024. Now, moving to the Canadian dollar. So we have seen that the Canadian dollar has weakened during the course of the last year, and especially over the past 3-4 months since the impact of the expectation of higher interest rates in the U.S. was absorbed by the market. So as we know that the exchange rates between two currencies depends on a lot of factors, but the chief among them is the interest rate differential. So interest rate differential between U.S. and Canada on an expectation, in terms of expectation in the future and both in current terms, is that U.S. dollar interest rates are going to be higher because markets are contemplating that the U.S. Federal Reserve is going to keep increasing interest rates. Vanguard's view is that they will probably increase between 1 to 3 times, 25 basis points each, and they will pause sometime in middle of 2024. But having said that, there's still a positive interest rate differential in favor of USD. And because of that, we see that the interest rate differential being in favor of USD has resulted into Canadian dollar being weaker. And then also, there's a factor of flight to quality that is helping US dollar against its major currency counterparts. So US dollar has strengthened against euro as well, and other developed market currencies. The reason is that because of the uncertainty, because of the geopolitical uncertainty that we have seen with Russia-Ukraine situation, more recently situation in the Middle East, with the commodity prices, more recently, apart from the last week events in Middle East, commodity prices were going down. That was also helping US dollar, and being the safe haven for investment flows, being the largest market, all of those factors have been helping US dollar more recently. And Canadian dollar, because of the high level of debt that's embedded in the economy, that is also putting pressure on the Canadian dollar in the near term. In the long term, however, we forecast that the Canadian dollar is going to strengthen as the economic and geopolitical uncertainty keeps subsiding. The events in Middle East are, in our opinion, are impacting the markets for now, but it's not going to have a long-term impact. The geopolitical situation in Russia-Ukraine case, it has essentially been priced in already in the market, and eventually US dollar, we are talking about long-term between 5 to 10 years, US dollar is going to weaken against its major currencies, and by the benefit of that, Canadian dollar is going to strengthen. Now on real estate, so as you can see, the top chart, the top line chart above is the Canadian household, Canadian housing prices divided by the household income. So the price versus income ratio has been consistently increasing, and it's essentially became an outlier since 2011-12. All the way up to the pre-COVID, and then after COVID-19, unprecedented monetary easing resulted into very high prices, housing prices, in the key metropolises in Canada, mainly Toronto and Vancouver. So because of that, we have seen an unprecedented rise in housing prices, and that has resulted into very high debt levels for Canadians, but their income levels haven't increased as such. So we compared it to the US, for example, the green line, the dark green line, and the 25-country average across all developed countries and some of the developing countries. So across all those countries, Canada is way at the top when it comes to the housing price ratio versus the disposable income. So as a result of that, the affordability for housing has declined quite a bit in Canada, particularly in the major metropolises like Toronto and Vancouver. So the result of that is there's an increased risk that is being priced in the market. The balance sheets for Canadian households are stretched as a result, and the chances of consumer loan defaults are being priced in the credit markets as well. So all of that is pointing to a situation, is pointing to a scenario where Canadian economy may slide into a recession, but it may also help Bank of Canada decide, and as I was referring to earlier, that is essentially putting pressure on Bank of Canada to pause earlier than we had envisaged, because on one hand, they have to balance they have to bring inflation down to the long-term 2% target, but at the same time, they are risking massive defaults, so they don't want that. So that is a kind of flexibility that's been curtailed because of the housing market and because of the higher debt levels that Canadians have amassed over the years. So now we'll move on to the US economy. So in the US, our views, as I briefly explained, are that the US Federal Reserve does not have the same constraint that Bank of Canada has as such, because although a lot of mortgage loans were originated over the past 2 years over the past 3 years during the low interest rate environment, but the U.S. market, it's very large compared to the U.S. So the absorption of those price levels has been widespread across a large number of the U.S. residents who've amassed those mortgage loans. So on a percentage terms, the increase has not been that great. And then secondly, for the U.S. borrowers, they can fix their mortgages over 30 years. So a big majority of the U.S. borrowers have been able to fix their long-term mortgage rates for 30 years when the interest rates were still low. So the impact of high interest rates has not been as detrimental to average mortgage payers as it has been for the Canadians. So we've been hearing stories about Canadians now feeling the pinch of high interest rates, especially those who did not fix their interest rates, they were not on fixed rate mortgages, and were paying variable. Yesterday I was talking to someone who told me they know someone who's now paying like about 7%, 7.5% mortgage at a variable rate. So all of that is resulting into economic hardship and difficulty for managing. And that again is having an impact on the decision-making process for Bank of Canada. So our opinion is the policy difference between Bank of Canada and Federal Reserve is this very point, i.e. Bank of Canada's flexibility in terms of bringing more tightening is being limited because of the the higher debt levels, the affordability, and then also the fact that it may result into massive defaults, and that could create this problem of bringing inflation down could morph into a much bigger problem, which they would not like to have. And then also, for the other factor that Bank of Canada that curtails Bank of Canada's flexibility is Canada as a nation has been welcoming immigrants. Many of us in this room are immigrants, and essentially over the last year or so, Canada has received over 1 million new Canadians, which has been unprecedented. The increase in Canada's population, a majority of that is attributable to immigration, last year was 2.9%. So that is, again, an anomaly compared to the long-term trends. So developed economies, there are hardly any developed economies who have those levels of population increase per year. So, and the last time when Canada had this large number of immigrants was in 1955, when there was a Hungarian Revolution, and essentially a large number of people from Europe, they migrated to Canada. So between 1955 to today, this is again happening after almost like 65 years. So all of that is resulting into the fact, as I said already, that it limits the Bank of Canada's flexibility to tighten the monetary policy or even keep interest rates higher. So our view is like, number one, Bank of Canada's tightening cycle is most likely they've reached their peak based on what I just explained, barring, of course, a scenario where there is a sudden spike in inflation and significant spike in inflation. Let's say there's a huge supply gap for energy prices that results into general high between 100 to 200 basis points increase in inflation. So that could compel Bank of Canada to go back onto raising interest rates. Barring that, we don't see that happening. So these are our forecasts for the key economic variables across US, Eurozone, UK, and China. So I'll hold this on the slide for a few seconds, just so that I can see many of you would like to take a picture. So please do that, and more than happy to answer questions on that later on. Okay, so now we'll move on to briefly discuss the Chinese economy, the European economy, and emerging markets. So in terms of China's growth, we believe that the growth target that China had set up last year, about like 7 to 8% growth, this is what we were expecting as well, has come down. Even though that they have ended the zero COVID policy, and Bank of China has instituted monetary easing, in contrast to monetary tightening globally. They've also been introducing steps to help with the credit situation in the economy. So all of that, we believe that the Chinese economy will grow anywhere between 5.5% to 6% over the next year. In Euro area, it essentially hasn't fallen into recession, which was a lot of our peers were expecting during 2023. However, the narrative of a weaker economic scenario for Europe is still not over. So we expect the inflation in the Eurozone to staying between 3 to 3.5%, on average about 3.3, 3.4% for the year. And the key problem that we had seen at the inception of 2023 related to the energy markets, and because of the supply situation with the geopolitical situation with Russia, that has subsided quite a bit, and that has helped the Eurozone in terms of bringing the inflation to the levels that we are seeing right now. The reason is that they managed that energy crisis, or morphing that problem, or morphing into an energy crisis very well by importing energy from other sources in Middle East, suppliers in the Middle East, Qatar, for example, and they now have massive storage of gas and oil reserves. So that has helped the European situation from European energy-related situation converting into a bigger crisis. So this is going to help Europe reap dividends in the medium term and maintain a good economic growth scenario going forward. On the emerging market side, so our leading economic indicators show that the emerging markets remain resilient, and traditionally, emerging market economies are considered as the small cap of the global markets, of the developed markets. So because they traditionally have higher beta to inflation, and they are more sensitive to the global economic environment, to fiscal and monetary policies. But over the years, as we have seen in case of China, for example, the economic stance has changed from consumer-led economies to more service-based economies, and as a result, their beta to inflation overall has reduced, i.e. their sensitivity to inflation and other economic variables of developed economies has reduced. With higher interest rates and stronger dollar, emerging market currencies are going to face weakness over the next few years. The reason for that is a lot of debt or loans that emerging market economies that they have borrowed is in US dollars. So because of high interest rates, it is going to have a negative impact on the emerging markets. So I'll pause here to take any questions if you may have before we go on to investment implications. And maybe I can take one or two questions now before we move on to the next session. Yes.
My name is Wei. I'm from Equiton. We are the title sponsor for the whole 3-day summit.
Right.
So we are a private REIT, right? And basically we're in the alternative markets, as Emily has mentioned, which is by estimates going to be a quarter of the total investment market by 2025.
Right.
I wanted to congratulate you. I want to say kudos to you and your firm, because I personally, in my opinion, I personally agree with a lot of the views that you have shared here.
Thank you.
I do think, based on the data, housing has become very unaffordable and unsustainable in Canada, especially on the nominal level. You shared some on real levels, right?
Yeah.
And I had two questions for you. First is, your base case for the Fed's monetary policy seems aggressive for 2023, which I believe you, on the slide, it was between 6 to 6.25.
Yeah.
That's what, another 2 hikes from where we are right now?
So we are expecting another between 1 to 3 hikes from this point onward. So, or 25 basis points each.
Right. And at the same time, you mentioned because of the restraints that the BOC faces, you believe the hiking cycle in Canada has come to its end.
Yeah, we believe it has peaked because of the restrictions.
Right. So my question is, what is, in your view or your firm's view, what is the realistic spread between the two countries or the two central banks' monetary policies? That's going. So the loonie is what, at 1.35 something today?
Yeah.
So if the Fed keeps on hiking and we just stay where we are, do you not see that being detrimental to the loonie?
Good question. So the markets, the way they function, they essentially price in the future events immediately, and that's the efficiency of the markets. So the impact of interest rate differential, as we know, it's already showing in the forward curve or the swap curves between the two currencies. So that impact immediately affects the foreign exchange markets. So an example of that would be more recently. So the loonie, as you said, you've been looking at it, like it recently reached about 137.50 level as well. And then over the events in the Middle East over the past week or so immediately had an impact on the oil price. And Canada being one of the large producers and exporters, it would benefit from oil price increase. So the loonie strengthened by about two points, currency points, almost immediately. So the impact of interest rate differential is already taken care of. If anything, we expect it will go back to about 136.50, 137 level, and will stay there until that interest rate differential story subsides. In the long term, however, because of the secular factors that we see with the U.S. economy, eventually Federal Reserve, I'm not saying next year, I'm not saying in 2025 or maybe later, they will eventually cut, just like other central banks. So at that time, the interest rate differentials will narrow down when central banks start bringing the monetary tightening, they start bringing in monetary easing, reversing the monetary tightening. And that will bring the interest rate differential back into the place where they were initially at the equilibrium level. So this is where we see the loonie to be coming back in the range of between 125, 130 range, that it's like long term. It has got stronger, much stronger than that, but there were other factors to that. So to your question, we do see that the loonie to stay at these levels in the short run, at least in the next, let's say, 3 to 6 months. It's very difficult to forecast. Interest rates is very difficult to forecast. Foreign exchange, but given the current scenario, our calculus is that loonie is going to stay within the range that I just described.
Right. So okay, thank you for that answer. So basically, you're saying the difference between the two central banks' monetary policies has been priced into. Okay, thank you. My second question is, you mentioned, QE is coming, and your firm's base case for 2024 is a recession of some sort, mild 55%. A bad one at 20%, right? So again, I agree with that. What is your recommendation, your personal or your firm's recommendation to the investors on a short-term basis for the next 1 to 2 years, not 5 to 10 years?
Yeah.
In a recessionary environment.
Great question, and that is a great segue to the next section, which is investment implications, and I'll answer to that in the next few minutes. Emily, how are we on time? 10 more minutes? Oh yeah, that's perfect, more than enough. So Vanguard, first of all, to your question, we never look at the short term as an investor, and we advise the same to our clients to invest for the long term. The reason is that in the short term, there can be price anomalies. Investors can make wrong decisions based on the market prices, based on the news, based on emotions. We believe in the long term. We believe that investors should set up their long-term objectives, long-term goals, and then build up an investment plan, financial plan, in conjunction with the help of your advisor. and then stick to that plan, and then implement that plan using asset allocation, using funds that are low cost. And there's a reason why I'm saying low cost, because our research shows that the cost is one of the major components or drivers of long-term investment return for investors. So A, set long-term goals. B, set up your asset allocation, have your financial plan. C, set up your asset allocation. And then fourth one is to implement that asset allocation using low-cost funds, because cost of funds essentially takes money away from your pocket. So it takes return out of your portfolio. Now, to your other question, what investors should do. So we are still in a very high interest rate environment, and we looked at 7 different periods of high interest rates over the past 50, 60 years. And as you can see on the chart on the screen here, some of the asset classes have traditionally done well during all those episodes of high interest rates, and some have not. So the final column, which says average on the top, essentially shows that, so it shows that the average column on the right, that high quality value stocks, international equities, they're the ones who have outperformed, they've generated good results. And on average, over the last 7 high interest rate environments. The asset classes that have not done well are low quality growth stocks in general, aggregate bonds, and high yield, and home prices, or real estate. So what this means is that in the current high interest rate environment, you should position your portfolios accordingly. Look for diversified investments across value stocks. Look for high quality stocks, high quality growth, and then position your portfolio over the long term. And these are our forecasts over the long term, over the next 10 years, across various subsectors of fixed income. So what you see here is, as I said earlier, Vanguard always reveres uncertainty, respects uncertainty in the markets and economy. And we provide our views, our long-term expectations in probabilistic scenarios. So the column in the middle that says 50th percentile is our most probable scenario, like median expectation. And that's what we publish usually for our public consumption. So Canada credit bonds are expected to generate about 5.1% as a median expectation over the next 10 years. Why 10 years? Because A, as I said, we invest for the long term, and B, it helps the clients, our advisors and their end clients, to plan for the long term. So if a client or if you have an objective that you want to send your son or your daughter in the next 10 years to the college, and you're saving for that, knowing that you're going to invest in, let's say, Canadian bonds that on average will generate about 5% return over the next 10 years, helps you plan accordingly. As opposed to looking at the returns over the next 1 year, 2 years, and then there may be a huge change over the next few years. So we try to smooth out that short-run volatility by looking at long-term. So if you look at like pretty much any asset class, especially equities and bonds, the long-term returns are stable. If you look at it at very long-term averages. And similarly, on the rightmost column, we look at the median volatility or the expected volatility of the asset classes. So Canadian government bonds, about 3.3%, Canadian aggregate bonds, about 4%, so on and so forth. And now this is our valuation matrix across different asset classes. So on the left, you can see that for the US bond market, we see pretty much all subsectors, including emerging market sovereign debt, intermediate credit, TIPS, long-term treasuries, short-term treasuries. They're all within the fair value or undervalued. So the yellow bar on the left essentially is showing fair value, the green bar is undervalued, and the red box at the top is overvalued. So in our opinion, high yield is overvalued, the US high yield. And that is why we advise our investors to instead invest in corporate bonds, especially Canadian corporate bonds, because on a risk-adjusted basis, over the long term, we see higher returns per unit of risk or Sharpe ratio for Canadian bonds going forward over the next 10 years. Similarly, if we look at it at international level, pretty much all bond markets are within fair value or undervalued level, the chart on the right. So Canadian aggregate bonds, in our opinion, are within the fair value band, same as Australian, UK, Euro. The only outlier here is the Japanese bonds. So that we believe is still overvalued, and we would advise to stay away from that. Now coming back to the global or the overall asset allocation in terms of valuation, we see US equities are still in the overall valuation category, as you see on the chart on the left. And majority of that is being driven by the US growth, as I'll explain in a second. Global X US equities are within the fair value bands. Same goes for the Global X US aggregate bonds and US aggregate bonds. On the chart on the right side, we basically divide the US equity markets into subsectors, and we see that, again, majority of the US equity market subsectors are within the fair value band, except the US growth, which is at the cusp of becoming within the fair value band. As you can see, it's at the border of between red and yellow box. So that essentially is the reason why I believe that there are opportunities within the equity markets. And to your question, what investors should do, in the current market, our advice would be for long-term asset allocation would be to invest in bonds right now, because contrary to many people's view on the street that bonds are probably not like a good investment given the negative returns that we have seen in 2022 because of rising interest rates, our research shows that bonds are essentially like, you have to look at bonds not from just the price point of view, rather the majority of the returns in bonds are driven by the interest rate that it generates, i.e. the coupon, and the reinvestment of those. So as long as you maintain the duration of your portfolio in such a way that the duration is lower than the total investment horizon, i.e. if you have a 10-year investment horizon and you've invested in a 2-year maturity bond, so every 2 years in a rising interest rate scenario or in a high interest rate scenario, you will be repricing your bond coupon at a higher rate, and you will be riding the curve. So yeah, your question.
So I think you're saying buy a 10-year treasury bond, treasury bill bond, and just hold it to maturity. So I think what I heard and what I read is tell me if I'm wrong. Cash is king again. Cash is not trash anymore in this high interest rate environment.
Well, yeah, so 2 points here. First of all, we are not saying that you should invest in 10-year bonds. It depends on your investment horizon. If you're a very long-term investor, then probably that makes sense. But if you have, let's say, on average 15, 20-year investment horizon, then we still believe that you should invest in a duration that is lower than your total investment horizon. So if it's like 20-year horizon, yeah, 10-year may make sense. And then secondly, with such high yields that are prevailing in the bond markets right now, we may not see them next year or the year after. So the yield curve on the long end of the curve has recently shifted higher over the last couple of weeks, especially with Federal Reserve's hawkish pause and the comments that they are going to stay high for longer. So all of that has made the yield curve to go higher. And this is a time to take advantage of those high yields and lock in 5-year, 10-year, depending on your total investment horizon. To your second comment, like cash is king, well, our research shows that when Federal Reserve, 1 year before the Federal Reserve has peaked, has reached the peak of its hiking cycle, cash generates or it beats the bond returns. But exactly 1 year after the Fed reaching its peak rate, the bonds beat cash. So it's very difficult to time the market to know exactly when Fed is going to pause and when we should enter the market and should I stay in the cash. Our view is that to invest in bonds now, if you have, let's say, X amount of money, start deploying it into bonds now, rather than wait, keep it in the cash, hoping that I can probably get a better opportunity. Because these are, like historically speaking, these are very high yields that you may not see going forward. So our advice would be to lock in those rates. The second part that I would like to say here is that because of expected high bond returns, our models are indicating for a balanced portfolio of, let's say, traditionally it used to be 60% equities, 40% bonds. On a forward-looking basis, on a time-varying basis, our models are now saying that for an investor who's looking for a balanced portfolio, should now invest more into bonds, i.e. reverse the position, 55% bonds and 45% equities. So instead of 60% equities, 40% bonds, 55% bonds, 45% equities. The reason for that is we now see an opportunity for the risk that can be dialed down. And by allocating more to bonds, investors can achieve pretty much the same risk-return profile that they would have achieved by investing more into equities. And guess what? By investing more into bonds, the volatility in the portfolio or the risk can be dialed down at the same time. So yeah, that pretty much brings us to the end of the presentation. More than happy to take maybe 1 or 2 questions and then we can end it.
Yeah, maybe we save the question when we have like panel discussion. Thank you, Bala. It's really intensive package and there's so many contents. Actually, it covers almost all my question list here. So look forward. Thank you. So our next speaker is also. I just try to like speak slow, and also I ask Bala to speak slow to make sure that the machine works. So it is like amazingly exceed my expectation. OK， 我们的下一个嘉宾也是非常重量级，那他特地是从美国绕道过来，本身是 base 在新加坡，那么可能你们看到就是有这个吴亚楠博士的介绍，我这边稍微多说2句啊，就是吴亚楠博士呢，他现在是 Surfing 集团的董事长、CEO 兼投资总裁。那么他曾经呢也是中信保诚基金的量化的投资总监。在之前呢，他也是加拿大 TD 的这个投资经理人和这个 VP。然后在这之前呢，他其实他是一个科学家，他是美国洛斯阿莫斯的实验室的科学家。 那你们知道有没有看过 Oppenheimer？ 那是跟 Oppenheimer 是一个实验室的，所以整个这个过程就是在我眼里，这个吴亚楠博士他是一个传起来的，所以希望等一下他有很多的分享，不光是他对中国亚太市场的见解，并且你们是看到从一个学霸到科学家，再到成功的企业家、投资人，整个一个路程。所以我们欢迎吴亚楠博士，谢谢。
Good morning, everyone. I think somehow today is a special day. I guess I'm really glad to be back in Canada. After working in Asia for 13 years. So, and also glad to meet my TD Green family colleague. So it's really glad to be back to Toronto. I know today is maybe a really gloomy with the terrorist attack warning. So hope with Steamflex and Equiton this forum we can become a Good Friday, right? Okay, so I hope can get you excited, and thanks to Bao just make a very good economic forecast for both Canada, U.S. and globally, and so he's recommending bonds. So I'm recommending another type of investment in alternative markets, investment in alternative energy, and investing in alternative data. Okay, so that's my main theme, and thanks to my friend Emily to make that kind of introduction. So I'm not really a expert on economics, but Emily said since I'm working in China and the last 13 years in Asia, actually 7 years in China and 6 years in Singapore and Southeast Asia. So I may bring back some of my observation, only observation. No recommendation, no conclusion about China and also about emerging markets. As a practitioner, as Emily just described, because I'm an entrepreneur now, live in Los Alamos National Lab as nuclear physics. I love peace, by the way, as a nuclear physics. So that's why I come to financial world. So this is just first part. I want to give some observation of China, and then I will go on to my fraction experience. Before the speech, everyone loves AI now. I think this is a great AI technology. And so before speech, I asked ChatGPT. I told ChatGPT, I'm going to make a speech today. I only have 20 minutes. I'm going to talk about new investment trend in emerging markets. What shall I speak? Okay, ChatGPT gave me this outline, very, very detailed. 20 minutes, break down each section about opportunities, challenges, economic, and technology, and fintech. But I think it's too much. So ChatGPT is smart, is very AI-able, but somehow it's not very specific for now. Okay, so I'll go to my own session to talk about my recent observation, because Emily said, why don't you talk about your recent meetings? So recently I attended speak at the Bond Summit, Shanghai 外滩峰会, okay, and also Greenwich Economic Forum. So I met a few well-known economics, like Jean-Claude Chirac, from former ECB president, and also Richard Koo. He's a very, very hot person if you're in Asia, because talk about China versus Japan. Whether China repeat Japan about balance sheet recession. So now he has a new name. Rather than Richard, everybody talk about Mr. Balance Sheet. Okay, so I met him and talked at the Bond Summit, and also recently, Emily just mentioned, I spoke at the Greenwich Economic Forum over there, connected. I met Ray Dalio. Everybody knows Ray Dalio now, and also Michael Spence, Professor Michael Spence. He's a 2001 economic laureate about leap forward opportunity, and that's the theme of what I'm going to talk about today. And he's also on my Surfing's board member now, so I'm going to talk about practice as well. So for the sake of most of the audience, I'll cut into Chinese now. Okay, so hopefully AI can help me to translate well. 首先我想就是今天这个时代哈，大家可能都很困惑，是吧？刚才 Emily 有几个关键词哈，一个是inflation recession，you have to pick， 我们得选择哈，对这个到底是方向在哪里？另外一个我觉得就现在进入一个战争模式，是吧？这个俄乌战争还没结束，中东战争也开始了，所以非常多的不确定性所以在这个环节，我觉得如果我们还向前看的话，其实投资来说，刚才问了很多问题啊，投资来说变得非常不确定性很大，怎么去 hedge， 怎么去对冲这不确定性 risk 变得非常重要。这是瑞达利欧讲了一句话，我觉得2020年这个大家都开始把它当作圣经一样啊，当 Bible 一样去读。他在 LinkedIn 上发表他的观点，我觉得这句话还是讲得非常好So the times ahead will be radically different from those we experience in our lifetimes, though similar to many times in history. So I think Mark Twain also said similar thing. History does not repeat at its own rhythm. Okay, so cycle. That's what financial economists do. 说那么用中国的这个话语境的话，我们的总书记是吧？中国的总书记习总书记说过“100年未有之大变局”，跟这个瑞达利讲的特别类似。所以我觉得我们在这个当口哈，这个改革开放40年之后，在这个当口可能面临一个新的世界哈，新的 cycle， 新的周期所以我想就今天我就很快的跟大家分享一下，我作为一个这个旁观者或者参与者也好讲讲中国中国，但是我绝对不是中国的 expert， 也不是中国的经济学家，我只能讲的一个 observation。然后最主要讲我自己所做的，在东南亚过去6年我们在10个国家，10个新兴市场国家，我们可以叫“一带一路”的新兴市场国家这个耕耘了6年，然后服务了4000万的用户用这个 digital financial inclusion 的绿色金融，所以从一个 nuclear physics 变成一个 global fintech entrepreneur very hopefully you can 我可以给你们一些这个 insight， 然后 about alternative。所以今天的关键词，刚才 Emily 讲的 bubble or alternative， 所以我希望大家能，如果今天忘掉我所有讲的，但是记住一个词 alternative，OK？Because data is new asset。中国这个非常缜密哈，我觉得对西方来说，这个很多的 conflicting signal， 对。但是我觉得有一个就是中国，我觉得现在如果从表象来看，的确问题很多的确现在中国有很多面临很多的不确定性。可以从股市来看到大家得知道 A 股和港股是吧？今年是表现最差的是吧？表现最好了，我不知道你们观察到没有？除了土耳其那个很奇葩的 currency 以外，土耳其股市表现是翻了6倍，但是因为 currency depreciate more than that。然后表现最好是印度、越南，然后印尼。所以你们去看一下，纳斯达克和道琼斯都没有跑过这个印度和印尼。过去3年，印度涨了60%。纳斯达克好像我看是只涨了20%、24%，3年。所以我觉得，但是中国曾经是新兴市场龙头，对吧 ？A 股一直很低迷低于这个 MSCI 这个新兴市场指数过去。而它的这个最主要的问题，我觉得现在这个左边这张图这个或者右边这张图看到工业企业最主要企业不赚钱了，企业在去库存。所以如果这个横轴是这个我们说是这个整个的年份，这个纵轴是企业的存货和它的生产的话，那么企业的这2个生产在下降，它的营收也在下降，那就表示它在主动去库存。所以在主动去库存阶段，这也造成了大家对企业未来的盈利、未来的环境更加的不确定性。所以往往说市场是经济的晴雨表，是吧？领先经济至少半年。从西方角度来说，那么股市相对来说还是比较客观的，所以对前途、对中国经济前面的这个，尤其在企业的盈利性上表现了很大的担忧。那么另外一个其实就是从这个大家看的比较多的就是房地产，是吧？中国的支柱性产业就是房地产，是吧？刚才其实讲了很多关于北美的房地产，那其实这个大家也都知道，房地产大家都知道出了问题尤其恒大最近许老板的问题，是吧？这个一个代表性的。那么未来可能还有更多的老板可能都陆续在去杠杆这个浪潮当中被抓进监狱，对吧？这是一个时代的一个信号。那么，但是主要的问题在哪里？我觉得一个是这个中国在希望从转变发展模式，从一个房地产投资拉动的模式 转到一个制造业，回归制造业，跟美国一样重回制造业。所以你可以看到右边这张图，这个3根红线大家都知道啊，就熟悉中国市场的，中国是3年前的3根红线，疫情前的，开始对房地产进行这个卡脖子，是吧？把水龙头关紧啊，那么也造成整个的 home 这个 credit 这个银行对房地产的市场的贷款急剧的下降。那从房地产银行贷款去了哪里？那么政府政策在主导，是吧？大基金和各种地方政府在扶持什么新能源，扶持各种的卡脖子的这个工业产业链。所以你看到在工业企业的信用这个银行在不断的增加贷款，所以来对冲整个的一个下行风险。但是结果在左边这张图，就事实上 Capex 在增加，但是在反映在企业的这工业企业的盈利上却还在下降。也就是说，中国政府在加大投资，在不断的 Capex 增加，但是企业还没有反映出盈利出来。这跟刚才我第一张图也一样，就整个还在去库存阶段。虽然政府的希望能够对冲整个投资房地产的这个下降的这个风险，那么主动投资到企业工业产业当中，但是工业企业当中目前还在像新能源汽车呀，还包括其他的一些产业链，新能源和这个 AI 呀，和这个各种半导体芯片呀，其实盈利性还没有真正体现出来。那么中国政府也是大家也都知道，中国这个一直在出各种政策啊，这个网上有人已经捋了一下，过去3个月以来，从7月份现在10月份，过去3个月政府出了30多条政策啊，我们在中国术语境叫做组合拳。在中国政府喜欢打组合拳，在组合拳当中怎么办？第一个稳房地产，第二个稳汇率，第三个是继续用流动性来支持实体经济，这就是3条，是吧？这个是这个30条组合拳的政策啊。那么当然这个中间这张图其实是这个英国这个 Financial Times 的总结哈。那么其实到现在来看整个从过去3年这个疫情的这个情况来看，真正复苏最慢的是房地产，因为3根红线，是吧？大家这个还在这个烂尾楼是不是要交房的问题，保交房，是吧？那么复苏相对更好的是交通运输，因为大家开始动起来了，对。但即使这样，它也只恢复了70%的这个水平，所以还没有恢复到疫情前水平。这就是中国经济的现状，就整个在一个缓慢的恢复当中，但是从 sector 从行业来说，还是出行消费这样恢复的那个更高，但是房地产是中国政府希望能够秩序不下降能够不要跌盘就最好所以这也是刚才讲的，从基建现在地方政府还在发债那么虽然地方城投债很大的问题，但是还是发债继续搞基建，那么基建来对冲这个房地产下行那第二个其实大家很关心汇率，刚才那个巴廖也讲了加元的汇率那么1.35 1.36是吧？那么人民币是吧？今年也是基本上创了一个记录这个已经跌破7了是吧？7.3，那么还有可能继续往下走。那么大家可能市场从市场角度来说，也许7.5是一个心理的关口当然央行也不断的去出央妈我们叫央妈出各种政策是吧？各种的手段去稳汇率。但你从这个最左边这张图来看的话，一般来说汇率和刚才讲跟加元美元一样，跟利差相关跟利差相关性很强。但如果做一个回归的话，过去这1年的话，其实它跟利差中美利差在中间这张图已经到06年一个最高水平了。美国刚才讲5%了是吧？如果今天像巴尔讲这个原改更加极端的话，那6%。那你可以想象，这个中美利差现在的利差会达到一个什么程度？中国还在降息，是吧 ？LPR 在降，是吧？这个大家存款的银行的利息还在降，所以那这个利差更大。所以我刚才说，就是人民币汇率可能还得跌，对吧？这挡不住。那但是，所以你可以看到，其实它不光是跟这个现金回归的那个圈表示它不光是跟利差相关了，它已经偏离跟中美利差相关，它在走一个独立的一个汇率的路径。那么这个其实可能是更多是对中国国内经济的一个展望和信心。那么我想用最右边这张图，我觉得还是很有代表性的，因为大家关心比较多的最近的一个话题就是房地产中国为什么要做房地产的这种3根红线政策？因为已经撑不住了，对吧？ 这是 home inventory 就是库存啊，库存的众筹啊和过去几年的一个变化啊。那么库存到了一个什么地步呢？现在这个我们不说烂尾了，我们说现在在建的和库存的房子要消化的话，大概到了一个历史相对最高的水平，23个月，23个月。这个水平什么时候遇到过呢？2014、2015啊。如果对中国政府这个环境继续比较了解的话，那时候是做了什么事儿？为什么当时也是到了一个23月的一个最高峰之后，为什么库存在不断下降？政府出了一个政策，现在大家都知道，棚户区改造。棚户区改造的货币化政策导致了房地产行业重新复苏，大家又开始建房子了，因为这是一个很积极的政策信号，那么开始要稳房地产，而且可能加大投入啊，所以这也是为什么我是觉得回过头来看，恒大犯了个致命性的错误，是吧？和这个龙湖是吧？有的中国房地产是在去杠杆，但是恒大在15年之后的一个周期还不断加杠杆，对政策信号所迷惑啊，那么一直到现在是吧？这个房地产库存又到了个最高点，那么我们现在又看到第二次棚户区改造也出来了，那可能它的这个改造的意义和第一次会远远不一样。这也是为什么，如果你看有统计学家做了啊，就中国现在人均面积大概40平方米，如果把中国现在 GDP 人均 GDP 和德国、加拿大这些发达国家、美国相比，做一个横轴对比的话，中国已经提前这个透支了20年。这个未来的这个人均房地产面积，当然中国的这个公摊是吧，和西方不太一样，所以如果把这个考虑进去，可能就是说没有像这么极端，但是已经到极限了。所以城市化、城镇化可能有多少能消化这块，我觉得我们还得再看哈。所以现在中国这2个话题，其实大家关心比较多的，一个是中等收入陷阱，另外一个就是我刚才讲资产负债表衰退中国会不会重复拉美的中等收入陷阱？第二个，中国会不会重复日本的失去的30年，对吧？这是2个最大家关心，为什么 A 股市不好？为什么大家从 FDI 从中国撤除了这个地缘政治因素以外，我可能觉得这2个问题最大的一个疑惑。所以我们回去看一下这个在拉美中等收入陷阱当中，我捋了一下，还很有意思哈。其实大家也都知道，这个从70年代开始，这个当然2021年这个世界银行这个定了一个什么叫中等收入什么叫高收入，什么叫低收入，这所有的国家大概人均这个国民收入低于1000美元的叫低收入在1000美元到12000之间的叫中等收入。当然这里面可以分低中等收入1000到4000美元，然后高中等收入4000到12000，然后12000当然是高收入国家。就中国很有意思，19年到了1万了22年去年到了12000，那现在就是在一个关口，从中等收入到高收入之间能不能跨越？要回过头来看，拉美在80年代的时候已经达到了人均1万美元。我刚从墨西哥过来，因为我们在墨西哥有业务墨西哥曾经是吧世界的一个经济的龙头，还有一个国家大家可能忘记了，阿根廷不相信眼泪对吧？失去了，曾经是发达国家，已经在那个坎儿上了，但它又回到2000美元了，从1万多美元。所以这是一个最大的一个担心，因为能跨过中等收入陷阱是一个非常挑战性的。当然我们看到成功的案例就在东亚，日本跨过去了，花了12年韩国跨过去了，花了8年，中国台湾也跨过去了，很有意思。我就看了一下他们，因为大家也看这个时事一看到奥运会的举办的年份跟一个国家进入中等收入年份基本还是有一些相关性和类似。日本64年奥运会了，墨西哥68年这个韩国是88年，其实这都是一个开始这几个国家开始进入中收入一个年份。刚才讲日本花12年从中等收入跨过了12000美元到高收入了，韩国花了8年跨过12000美元到了高收入了中国08年开始进入人均3000美元的这样一个阶段，那么到现在已经到12000了。那么是不是中国能够重复东亚的神奇的故事我们就是来看中等收入对拉美来说教训是什么。其实大家都在看那我在那个墨西哥和我墨西哥的同事聊，因为他墨西哥人更懂得墨西哥 曾经的辉煌，也曾经的到现在的开始还在爬坡，是吧？那么其实我觉得3个最大因素，是吧？这个大家也都知道。第一个，如果一个国家过度依赖低廉价的劳动力而不做改变的话，迟早制造业会流失。所以拉美最大的，你可以看它的出口在进入中等收入怪圈之后不断下降，因为它所谓的低收入开始被东南亚的更低收入的国家所替代。尤其中国加入 WTO 后，那中国的这个低廉的劳动价的红利彻底爆发出来。那所以一个国家如果过度依赖低廉价收入的话，那么它肯定是走不出怪圈。所以教育投入变成一个很大的因素。第二个就是这个贫富分化，对吧？因为这个大家都知道，一个国家的政府的腐败也好，这个贫富分化经济系数越高的话，这个国家会越来陷入个怪圈。那么中国现在也在经济系数不断放大当中，这是一个担忧，对吧？所以我们说这个大家很不理解这个共同富裕，是吧？共同富裕大家看怎么去解释这个事情。但的确中国现在需要这个把贫富人均能够拉平腐败当然也是一个致命的拉美国家的问题所以我们看东亚我刚才讲了，这边画得很明确，日本在这个80年代初的时候开始到1万美元，韩国是在90年代这个初的时候到1万美元，那么都成功的跨越了，包括中国台湾香港那么现在就是中国能不能跨到1万2美元以上，那支柱型产业谁来带，是吧？房地产这个产业链足够长，有没有任何其他产业链能取代房地产，成为中国支柱型产业再带一层？那这个是一个从政府到民间大家都在思考的问题那么东南亚也是现在在这个关口能不能成功的去开始进入中等收入之后，能够去跨越到中等收入这个中高等收入。所以我觉得这个其实还是在于这个中国是不是还有其他的红利，是吧？那中国还好，我觉得有个 education dividend， 是吧？就是教育的红利。中国首先扫清了文盲你可以看到我们现在对很多一些发展国家，包括我去过非洲，是吧？去过印度，是吧？我们在10个国家，一带一路10个国家都看了，我比较了不同的国家，教育是一个根本文盲的扫除的确是帮了中国很大一个部分。所以你看现在中国的产业工人，他为什么在东莞可以形成一个完整的产业链，是吧？不出100公里，所有的你可以想象的这个工业的环节和这个产业链全部齐备了，没有任何一个国家现在还能够做到这一点，包括印度。因为就是我们的产业工人的这个教育素质开始不断的提升，所以富士康为什么迟迟，是吧，搬不离中国？那其实这里面背后是 skilled labor， 一个教育的红利还是在中国的一个这个继续的发挥当中，再一个工程师的红利，是吧？中国的工程师是比较多的，所以这是我觉得中国还是能赖以生存的。那么然后在另外一个话题就是这个资产负债表衰退，是吧？就是因为中国已经提前进入了一个老龄化的社会我去过这么多国家其实我看了这个比较很有意思这个中国平均年龄已经到38岁了，一个14亿人口的国家平均年龄到38岁是个什么概念，是吧？然后大概大家也知道2025年之后可能中国这个65岁的人口可能要占1/4，那这典型的进入了一个超老龄化的社会。日本就是提前进入了个超老龄化社会，在它进入中等收入发展当中开始迈越跨越了，但它成功的跨越了但是在落后的30年可以看到中美和日美之间的这个差距，可以看到如今中国能超越日本成为第2大经济体，中国是吧？除了 WTO 全球化的红利之外，日本失去的30年是它的老龄化，是它的这个资产负债表的衰退，就是企业的需求在不断下降。当一个国家，当一个社会进入老龄化，大家需求开始下降了，大家风险偏好下降的时候，大家不愿意再去投资，不愿意再去这个去冒险的时候，企业家精神开始丧失的时候，那么创新的精神开始过去的时候，那么这个时候是一个国家一个社会最致命的那所以我觉得这个是讨论资产负债表衰退的时候那么当然这个理论是 Richard Koo， 是吧？这个顾长明先生，是吧？他是野村证券的首席经济学家，我也在外滩峰会跟他聊过。当然现在他也很有争议，对吧？他这个变成红人了很有争议 那么也就是说，他的提议就是政府应该刺激，是吧？企业不愿意借钱了，企业这个需求降价了，政府应该接过棒来，政府应该积极的财政政策。在资产负债表衰退周期，任何的货币政策会失灵。这是为什么我们看见中国的央妈不断的降息，但是没有任何反应，对吧？这个流动性非常好。你看今天的社融数据稍微好转了，但你如果看7月份中国叫社融社会融资，这是反映这个一个社会需求的，非常惨淡，大家不愿意借钱了。现在我每天这个有时候收到电话，工商银行各种银行的电话，要借钱吗？是吧？要买房吗？要修房子吗？对吧？修这个维修贷是吧？其实这个是现在银行最难的，没有愿意借钱，跟日本当年情况一样，就大家的风险偏好极度降低。那所以这个是我觉得资产负债表衰退当中它的理论或者它的建议是所谓的政府应该积极的财政政策，是吧？赤字扩大，是吧？让赤字来解决时间换空间，把企业的需求可以激发出来，是吧？这是资产负债表衰退，但是我们看到带来的后果，这是它有争议地方，就是银行的坏账不断加大。所以这也是为什么最近城商行，对吧？大家看到很多不平静的信号。银行的金融系统如果出现系统性的风险，如果资产负债表继续恶化的话，那么政府再大的财政刺激政策对企业、对社会环境都是一个巨大的伤害。所以这是资产负债表衰退它有局限的地方。那么所以日本不能照抄，那么怎么办？我觉得这个还是回到我觉得一个咱们的基本面就是说中国的杠杆已经太高了，企业的杠杆太高了。我们刚才讲恒大的例子，其实恒大可以是一个缩影，也可以是个悲剧。就在不断加杠杆当中，中国企业只有依赖银行间接融资，直接融资市场一直没有发展起来，对吧？这个 A 股我们这个说，有人说这个谈恋爱是吧？这个最动情的一句话是吧？就是说我要爱你，一直到什么时候？直到 A 股在腾飞的时候，直到中国足球在腾飞的时候。海枯石烂是吧？这个当然是一个段子了。对 A 股一个问题，最大的问题，供给太多。你看今年的 A 股 IPO 已经超过美国了，是吧？美国的7大是吧，不断的回购，是吧？这7大的这个不断回购，但 A 股还在不断的 IPO， 这么大个池子，是吧？5、6千家公司了，但是真正能拖得起这个大池子的底气在哪里？是吧？这个是我觉得现在我觉得中国现在企业没有其他手段，是吧？只有间接融资，所以也造成了恒大这种行业的悲剧，对吧？你最后是欠的全是企业的银行的钱所以我觉得直接融资如果不解决，这也是为什么这个我们的总书记是吧？中国总书记也说了，新总书记，资本市场牵一发动全身，要活跃提振资本市场信心，这最近的口号，对吧？那么这是到了这个节骨眼了。你看日本、韩国，你看这个美国，尤其是一个国家资本市场不发达，不解决融资这个企业融资的问题，最终那都会是可能跳不出这个怪圈，对吧？资产负债表衰退在于直接资本市场，在于企业愿意创新，在于企业愿意冒风险，在于企业能够融到钱，做对的事儿。这是中国现在急需重振民营企业信心的一个关键环节，不是开几次会，不是说这个企业家是自己人讲个口号而已，而是解决2个问题：融资环境，第2个鼓励大家创新，容忍犯错，容忍企业家去做该做的事情。否则的话，资产负债表衰退，日本落后了30年，还是一个风险。当然，我们说中国，我们还是看多，对吧？并不是说我们是中国人就看多，而是说中国的确它有它的红利还依然在。刚才我讲这个教育的红利是吧？工程师的红利是吧？这是相对，所以说现在大家都说中国产业链在转移，但是我也去了印度是吧？我也去了越南是吧？我也去了菲律宾当然也去了墨西哥要像中国这样一个整套体系的产业链转移，没有个10年，其他国家接不过棒。所以这也是为什么美国是吧？最近不停的是吧？这个说这个舒默是吧？去访问中国，美国的通胀是吧？已经承受不了了是吧？必须和中国和谈。那么中国在新能源 在很多的产业链上还有垄断优势，是吧？这是大家都希望谈气候、谈绿色，但是中国在这个环节上反而是最有优势的，产业链最全，是吧？所以我觉得这个是中美之间还有和谈的基础，是吧？中欧之间更有向绿色转型的一个对话的机制。就是中国幸亏这么多年产业链建起来了，而且在新能源这个发力了，这也是为什么中国现在提倡新能源汽车整个的一个行业，希望能够成为中国房地产行业的一个替代性的产业链。因为没有任何一个房地产这么多从上游，是吧？铁矿石，是吧？中国已经占了70%了，是吧？澳洲为什么跟中国一直扯不清的关系，是吧？加拿大包括咱们的这个，我看外面还有很多的 mining company， 是吧？所以我觉得这个是我觉得中国和西方从产业链来说，房地产的确是杠杆拉动性效应，但是新能源是不是能取代？我觉得这个我们需要看。所以我给一个非常正面的这个回应哈，就是说，当然回应是吧？总书记最近又说话了，是吧？他提了一个叫新质产生产力，我们大家都在学习当中，都在理解当中。但我理解就是一个中国需要进行创新了，需要技术革命了，只有这个才是最根本能够取代房地产行业，取代中国过去投资拉动的转型经济的一个新的方向。所以说，投资中国还投不投，是吧？那我觉得转变思路，过去投贝塔，投 high beta， 是吧？中国过去30年的 GDP 的8%到10%一个高速增长，但是未来10年、20年，可能就4到5，是吧？这是政府也说出来的。那么 high beta 变成 moderate beta， 变成更多是投 high alpha， 好吧？这是中国的 story， 我想就时间可能不多了，是吧？我就尽快的往这个东南亚，希望大家能帮我我带你们去看看一带一路哈。一个东南亚，我觉得和南亚哈，我觉得更多是一个产业链的转移的红利哈。刚才我已经说了这个虽然时间会很长，所以反而是未来10年是印尼和印度的20年，中国的20年黄金20年过，黄金30年过去了，未来20年应该是印尼的黄金20年。这验证模型，这个日本的赤松南经济学家提出来的当然这个时候我画了一个图，过去这个亚洲4小龙怎么取代日本、韩国成为一个产业链的这个制造业的基地，然后中国大陆怎么样又取代亚洲4小龙成为 WTO 一个产业基地。那么现在棒又交过去了，这个验证一直在移那就是现在我们所去的一带一路的东南亚和南亚为主这个所以这是我觉得这个无论是 China 加1也好，还是 China 加 N 也好我觉得这个是一个未来的红利的市场所以这也是为什么我6年前这个在新加坡设了母公司 Survey 然后我们去这几个，当然也是顺从一带一路的这样一个号召当然我们更多是看到了这些国家的红利所以这是我觉得从比较优势来看其实另外一个中国的话题是从东部到西部。这个右边这图很有意思，中国的西部和中部的过去1年的出口已经超越了越南和墨西哥的出口，也就是说很多富士康很多的产业链从东部已经往中西部移了所以这希望带来一个稍微正面信号，就中国的中西部能够在这个产业链转移当中能够得到一些红利这是我们 Surfing Meta 过去说一点小广告我们这个去了东南亚的3个国家，南亚的印度和拉美墨西哥和秘鲁非洲的这个东非的肯尼亚这个乌干达和西非的尼日利亚。大家如果愿意去看这个动物大迁徙的话，欢迎跟我联系，我们去肯尼亚走一趟，是吧？这个 African Lion Safari， 我们也在北京、在新加坡有我们这办公室，全球2300人我们这个庆祝了6周年我喜欢 Canadian 的 baseball， 所以我训练我的同事员工都是打 baseball 打 softball。最近我们在 Forbes Asia 也得到了新加坡当局的一个注意关注把我们作为一个封面报道，作为 Forbes Asia 福布斯亚洲的一个Global FinTech 的 Head Leader 对所以这是我觉得是我觉得就是说，如果要解决中等收入陷阱，对很多新兴市场国家，首先贫富差距要解决所以我们希望能够先让那些 unbanked 这个我们说穷人吧，或者说一个不幸的边缘人群能够 access to financial service所以这是我们的 vision 所以大家我不知道有没有概念，大概现在全球有多少 unbank 啊？那 Boston Consulting Group 波士顿咨询权威机构统计的全球1.5亿人还是 unbanked 没有银行账户的。我们坐在这里可能很难 imagine， 可能很难 appreciate， 全球15亿人，对不起 1.5 billion 15亿人是没有银行账户，28亿人还是 underbanked， 加起来43亿，全球80亿人去年到80亿，超过一半是没有被银行服务到位的所以这是我觉得我们希望能够去mitigate。
Surfin, founded in 2017.
我就用一个 video， 我就不用过多讲我们的业务就是说做个看我们这个过去6年这个走过了10个国家。
in 10 countries on 3 continents and has over 2,000 employees worldwide. With nearly $2 billion transaction volume, Surfin has expanded to different fintech areas. Since in some countries, even more than half of the population still not have full access to traditional financial institutions, Surfin has adopted advanced technologies to develop credit scoring and risk management systems driven by big data models. Sufink, the first global Surfin credit card, is partnership with Visa, has also been issued, which ensures Surfin to scale fast across multiple regions and provide financial inclusion to more people. With the increasing number of middle-class young families in Southeast and South Asia, Surfin has established a young and dynamic investment community. Robo-advisor platforms like BullSmart in India and AOVest in Indonesia, and global quantitative asset management strategies. The demand for more secure and stable cross-border remittances and payments has also promoted Surfin to build a convenient payment-as-a-service platform to enhance our fintech ecosystem and serve global fintech participants and local financial institutions. Surfin's fintech are composed of 4 core technologies: LendTech, WealthTech, PayTech, and ChatTech. Surfin has developed proprietary LendTech. 1. Surfin Lab to provide comprehensive smart risk control services like OCR, facial recognition, anti-fraud, risk feature development, and user behavior analytics. 2. Surfin Score to provide big data-driven credit scoring services. 3. Surfin Cloud to provide services like AI-powered robot voice, decision engine, and event tracking and analysis. So far, Surfin's LendTech has served more than 35 million registered users and delivered 25 million credit scores with over 400,000 features, 150 million photos, and 1.2 billion graph nodes. Surfin's WealthTech is based on integrated cloud and incorporates cloud-native architecture, materialized timely updates of products, flexible services of adaptive data, high feasibility of the system, low costs of structuring, and outstanding digital operation and maintenance. Surfin's PayTech is characterized by strict restrictions of data consistency, auto error inspection and recovery, vendor dependency control, risk management, anti-fraud, and other mechanisms, ensuring the trading security and stability of Surfin's payment products. Surfin's ChatTech, thanks to the newly emerged AI infrastructure and the deep integration of Surfin's rich business scenarios and multi-dimensional data, Surfin ChatTech reshape the product and provide a revolutionary experience. Surfin has always been striving to become a fintech leader for digital financial inclusion and empowerment in emerging markets to enrich more people's lives by being transparent, inclusive, innovative, and compassionate. Surfin forges the links of engagement in the global digital finance future.
现在 ChatGPT 也进入多模态了，这些都是 ChatGPT 生成的一些digital figure 数字人。所以没有版权问题。所以我想，我们希望大家可以看到，其实大家都在讲 AI， 但是我是觉得 AI 真的是在改变我们的生活状态，是吧？中国已经提前超越发达国家，进入一个无现金社会。我现在去印度 在印度，大家如果去过印度，欢迎大家跟我一起去哈。这个虽然中印关系有时候是吧比较 shaky， 在孟买他们有个3轮电动车 auto 啊，3轮电动车啊，这个就是我们叫电麻，如果这个中国湖北人大概知道电麻啊。我本来以为坐那3轮电动车要付 cash， 但是人家不收 cash， driver 就是翘个2郎腿，光着脚是吧，非常的悠闲，不收 cash。scan code 啊 ，UPI 印度的 UPI 非常 powerful。印度这个吸取了中国银联的教训，中国银联没有管住支付宝，当时是吧，没有管住微信支付，结果让这2个巨头出来了。现在银联是吧开始追，对吧？那么但是中国出现的问题就是这些数据是吧？支付宝微信支付的数据归谁拥有？那么印度政府莫迪政府很强势，觉得数据应该归政府所有，所以所有的支付系统底层支付系统应该政府来推动啊。所以 UPI 是印度的银联啊推动了这个 Sparkle， 所以印度提前进入了一个无现金社会，而且它的数字化更加彻底。印度这个在座可能还没有去过印度，印度的这个居民身份证它是一个 Aadhaar system， 是一个眼睛虹膜的身份证是吧？我们调了2代身份证，加拿大身份证还怕被盗是吧？它是虹膜1对1确认的，所以没有任何盗的风险。我去肯尼亚，我们觉得非洲很落后，肯尼亚这个国家50%的人是这个没有银行账户的，但如今99%的肯尼亚人都拥有一个电子钱包，像支付宝一样叫 M-Pesa。为什么他们会拥有？因为中国有个手机叫传音手机，传音手机把非洲兄弟姐妹拍得更漂亮，不会过度曝光，黑脸白牙齿，对吧？他调了这个 camera 这个技术，所以传音手机变得非常 popular。也因为中国的移动互联网智能手机的渗透，以至于他们发现肯尼亚人每天晚上啊喜欢唠嗑是吧？这个不充值，结果欠费，肯尼亚半夜60%的所有肯尼亚人欠费。他的这个 telecom 肯尼亚的中国移动啊，类似肯尼亚的全国的电信供应商觉得很头疼，怎么办啊？支付宝提供了一个解决方案，电子钱包，白天可以在报摊现金充值到电子钱包 M-Pesa， 晚上可以继续打电话，对吧？也因为电子钱包，如今他们所有的超市啊，所有 convenience store 都用了，所以肯尼亚让我耳目一新。非洲我们觉得非洲很落后，但是我一直讲我的主题叫 leapfrog， 那么整个的非洲现在正在经历一个再弯道超越，它不需要银行账户了，直接进入一个电子钱包的系统时代。所以我觉得这是投资新兴市场 invest alternative country and region 的一个 benefit。 You invest in the future, you invest in young demographic, you invest the future consumer market, large consumption market。这个我觉得我有幸从一个这个奥本海默的实验室的这个核物理科学家走出来进入一个新兴市场投资全球，投资这个新兴市场所以我觉得这个我觉得未来我们觉得这个中国的 AI 的技术以蚂蚁金融这种技术和这个数字行为这个风险模型的技术会渗透到更多的新兴国家的领域，这是我觉得这是比较这个激动人心的。所以我觉得 alternative age data is a new asset, data is a new gold, data is the future. So invest in data that's I think the conclusion 所以这些我就不过多再讲了，因为很多技术细节我觉得这是我们在新兴市场这个投资的一些案例我们怎么样用数据来服务金融科技的各个行业改变了4000万用户的这个生命。最后我觉得到结尾了收一点正面的这个因为今天hope is a good Friday I'm sure it's a good Friday尤其在战争的这个 mode 下我想起了这个加缪Albert Camus 讲一句话，我觉得还是和现在挺相关的他是1957年在诺贝尔文学奖上讲这句话 Each generation doubtless feels called upon to reform the world. Mine knows that it will not reform it, but its task is perhaps even greater. It consists in preventing the world from destroying itself. War is not a solution. Decoupling is not a solution. Cooperative harmony is still is the hope for humankind. And how does it happen? Technology. Invest in technology, invest in the future, invest in our young demographic population. 未来还是美好的，大家周五快乐，谢谢。
谢谢亚楠啊，就是很多的内容也很激动，然后我看到他巨大的那个商业版图，我相信等一下可能你们在结束之后会有很多问题问到亚楠，我相信他也是张开这个胸怀要合作的，对吧？是有机会合作。现在的媒体向更多的这个听众和观众去传播。那么我们先请一下我们刚才2位非常精彩的演讲者，我们先请亚楠博士请，谢谢回到谢谢 Bala，Thank you。Let me welcome Brittany， 我们唯一这边今天的女士。我着重介绍一下 Brittany 哈。Brittany 是我 TD 的同事她是distribution PIA distribution 的这个 Vice President 在 TDAM TD Asset Management， 所以她跟亚楠也算是旧的同事，然后大家都是行业这个同行，可以有这样的一个交流。那么我们现在就开始我们今天的这个panel discussion。那如果是之后有些问题的话呢，也方便可以传递上来。那么今天其实呢，在刚才的这个整个过程当中，我们是有过很多的讨论，他们把很多的问题都其实已经在这个讲演当中能够 cover。那么尽量我们希望就是有些新的这个角度去提到。那 as the only lady here, lady speaker here, welcome Brittany.
Thank you.
So I would like to have the first question. So we talk about a lot of alternative investment here in this stage, and then because you work for like asset management department, so from an asset allocation perspective, can you talk about the importance of alternative investment from your view, and how that, I mean, in Canadian market, as the Canadian investor, how they can participate with the alternative investment here?
Definitely. Well, I'll just begin by maybe even piggybacking off a little bit of what Bilal was covering. That at TD Asset Management, we have a lot of the same views. And so when we talk about alternative investing for clients, oftentimes we are looking for something that's maybe uncorrelated to their current stock and bond allocation. So we're talking something that doesn't necessarily go down as much or up as much, but maybe can act as a differentiator within an asset allocation model. So there are options out there for Canadian investors. Most often, we find that investors will lean into their financial advisor, much like what you do on a day-to-day basis, to access this, because it does require some education. It does require, it's not the same as stocks and bonds, which they might already be comfortable with. So they need more guidance, they need more advice on that. At TD Asset Management, we have a lot of different solutions. And so I can say Canadian investors absolutely have variety of what they can choose from. I think when we look at alternative investing, you know, a lot of times we think real estate, but on a commercial level, so we prefer when entities like maybe a government agency is a tenant in a commercial space. So we have pooled opportunities for investors to access commercial real estate with a diversified kind of pooled portfolio within it. Commodities is another area, and that's actually, we have a commodities fund that there is no competitor. There's no direct way to invest in a commodities forward contract, for example, without going to the commodities markets directly. So we do advise oftentimes to include asset allocation that is just simply uncorrelated to those typical stocks and bonds that most investors are familiar with.
Thank you. I think you mentioned about a commodity. Actually, as a Chinese investor, we like commodity a lot. I think Vala had mentioned about the oil price, the energy supply, and where we are like a little bit panicked about recent conflict in the Middle East. And how about gold? So do you think that is something like safer buffer, we should all go for gold, or what is the view?
Yeah, thanks, Emily. Great question. So our view is that commodities in general are especially gold, those commodities which are not generating any carry. Gold does not provide any dividends, for example, or does not generate any income. And in an high interest rate environment, it essentially becomes a disadvantage to hold gold because there are storage costs. So there is a negative carry for gold to be held in a portfolio. On the other hand, like to your previous question on alternatives, so we did a study not too long ago in Canada, and we looked at the historical returns on alternative assets such as Brittany said, real estate or other infrastructure assets, and compared it to a typical 60-40 portfolio, i.e. 60% equities, 40% bonds. And we looked at long-term returns, and we realized that on a risk-adjusted basis over long-term, investors are better off investing in a typical balanced portfolio of 60% equities, 40% bonds, because like if you look at it in an environment like this, where alternative investments, just like any other asset class, because of higher interest rates, they have moved in the same direction, i.e. the south. But having said that, if you look at the equities versus bonds correlation, so many critics of 60-40 portfolio have, over the past couple of years, have said that because they have moved in tandem, i.e. the correlation has been positive, what's the point of investing in 60-40? So we emphasize on the fact that as an investor, you should not look at short-term correlation. More of the studies that I'm talking about where the critics were referring to, they looked at 3 months correlation of equities versus bonds. We looked at 36 months correlation between equities and bonds, and in majority of the cases over the last 50 years, equities and bonds have enjoyed a negative correlation. So over long term, the negative correlation between equities and bonds or stocks and bonds, i.e. they move in opposite directions, essentially holds. What's the benefit for investor? For investors, if they maintain a balanced portfolio of 60% equities, 40% bonds, if equities go down, the bonds are there as a ballast to the portfolio. It supports the investors during bad times in equity markets. And currently, as I was talking earlier in my speaking session, with current high yields on bonds, with the high coupons that investors can get, it makes even more sense to include bonds. So with high interest rates, alternatives, in our opinion, in Vanguard's opinion, are not a good, I would say, asset allocation strategy, especially when you have, with high interest rates, you have lower valuations in equities coming in, so, and you're enjoying high coupons. So deploy your capital to that combination. That would be my take, Emily. Back to you.
Thank you. So for when we talk about alternative investment, we know that I think Yanan is also doing some PM's role and also now managing the funds for those family office with also institutional investor. So previously those alternative investment was only like offered to the institution investor. But now it's open up to the retail investor. I would like to have some view on, Yanan, how, from the risk perspective, how do you think that is, are we like, as an individual retail investor, are we like taking more risk? And I will like also hear Brittany's view on that.
Yeah, thank you, Emily. And you know, as you just introduced, I used to share with Brittany, TD Green family, part of TD Asset Management, managing Canadian pension assets, insurance assets, and endowment. So I was actually trained as a secondary market portfolio manager after nuclear physics, that prior life. Now I'm an entrepreneur as well, kind of a multi-personality like Oppenheimer probably. Yeah. So to answer your question, I think pick up from previous both Barrow and Brittany comment about alternative asset class. To me, gold is to retail investors could be a hedge. You're talking about risk, right? So I think there are lots of different kinds of risk: credit risk, country risk, and also this geopolitical risk. I think that's why I think now I would recommend any retail investor adjust investment expectation. Be more rational. The QE era is gone. The printing money, helicopter printing money, Big Bang. So that's why we have enjoyed such a bull market, both in equities and bonds before this rate hike for the last 15, 20 years. But now, really, we're living in a radical different time. So I think adjust investment expectation. I agree with Barrow. Take a longer-term view rather than short-term. Because short-term, no one can predict. Who knows? Russia invades Ukraine at that time. I have a colleague, because we have office in Ukraine, actually, before the war, October. We set up the office and ready to launch a mobile fintech product for Ukraine and expand to East Europe. And who knows, if, on February the next year, the war broke. Even my colleague, my staff, my number one staff from Ukraine, a very beautiful young blonde lady, and she said, no way, there's no war. Russia always, just give a warning, no real war, no one wants war, but who knows? Even Ukraine didn't know that. So I think short-term really hard to predict. So I would suggest hedge. So I think gold is a hedge, 5% maybe for a retail investor, for extreme, the end of war scenario, 5%. That's why many sovereign wealth funds already allocate to gold. You see the gold price actually doing very well. So I think the sovereign wealth. Second, hedge the risk is I agree, credit risk. So I think I agree, high, government bonds, probably, with the AAA, with a better allocation because the yield's going down. Eventually with the recession scenario. Thirdly, I think a value stock. I think for those talking about free cash flow, ROEs, I think those are the alphas. And that's why I think, Tesla, Apple, they still enjoy the dividend, free cash flow, and also high ROE for the future growth. So I think alternative either focus on government bonds with, certain allocation or new energy, because that's the future for alternative asset class. Yeah.
Thank you for the insights.
Yeah.
What is your how the retail investor control kind of risk when they enter into the alternative?
Well, it's funny. I can definitely tell you have a TD background because we talk about free cash flow all of the time. And Emily, I know you've heard me talk about it before as well. So we definitely feel when we talk risk-adjusted return, we have a fiduciary responsibility to our investors, right? And so we take that very seriously. First, as a simple statement. But what we're doing when we say we want to look for quality companies is we're looking at that free cash flow. We're looking at that today. We're looking at that what the projection shows in the long run. So quality. And so when we talk about alternatives, that still holds true. We want quality alternative investments. And so when we look at commodities, and I'm going to go back to that for a second because the Bloomberg Commodity Index has 24 different commodities within it, right? And so when you look at energy in particular, that makes up roughly 30% of the index. And so energy definitely falls into that alternative space. Gold makes up 16% of that benchmark. And so when we talk alternatives, I think those are the places our minds go first, because that's maybe what we're most familiar with or most comfortable with or maybe can relate to the most. Gold, we can at least kind of wrap our head around a bit in theory. And so when we talk alternative investments, I think how do we access that? Once again, I think taking a pooled approach, a diversified approach, can add a hedge. And we look at what are institutional investors doing? We tend to see trends start with institutional investors and trickle their way down to retail. Alternatives is maybe one of those. ESG is another one. And when we look at what institutions do, they are hedging their businesses, whether it's Air Canada hedging their fuel costs. When we look at the Ontario Teachers Pension Plan, for example, pension plans need to last a long time and need to be able to spit out income. And so we look at how are institutional investors hedging their investment, and that is through commodities. So now that is available to retail investors, to your point earlier. And again, it oftentimes takes some education or takes some guidance from a financial advisor. So a pooled approach, taking a diversified approach, not just putting all of your maybe alternatives allocation, your 5% or so, into energy because that's what or into gold because that's what you can maybe wrap your head around. There's ways to diversify even further because, again, as we're all in agreement, it's hard to predict the short term, whether that's predicting what a rate's going to do, what is the stock market going to do. It's easier to say over a longer term time horizon that trends do become a bit more predictable. They do tend to repeat themselves. And from an alternative standpoint, if by adding commodities to your asset mix, you are able to kind of push out that efficient frontier. So I'll wrap it up with that risk-adjusted return comment, right? Quality, quality, quality. And when you look at your allocation, it's about diversification. And if we really are headed towards a recession, which I think many people in the room would likely agree with, including our best thinkers in TD Asset Management and our analysts, taking a diversified approach and really looking at that longer term time horizon is what's going to get us all through and fare better during the time of volatility.
Okay, let me ask bonus question. Just give me a name of each of you, one alternative investment you had with your own portfolio. Okay, let's start with Brittany. Just one.
Okay, well that's hard. But I'll narrow it down to our commodities pool. So it's the TD Alternative Commodities Pool. I mentioned 24 different commodities, tracks the Bloomberg Commodity Index, and has an active tilt in there. So long, short, and active management behind it.
How about you?
Good question again, Emily. So for my long-term portfolio, my retirement portfolio, I do not invest into alternatives. I don't invest into commodities because the views that I just shared with everyone. But I do maintain a very small tactical portfolio, and because of my background in derivatives and structured products. So basically, time to time, opportunistically look at energy markets and take positions if and when it's important. But so yeah, I mean, tactically, that's I understand is not aligned with what I was just saying in terms of Vanguard philosophy. But since you asked about my personal portfolio, that's a very small tactical positioning.
Thank you for sharing. Dan?
Yeah, so I wear two hats. So one is a second market portfolio manager, and the other is entrepreneur in emerging markets. So I will give two recommendations because I used to be a quantitative trader. So I think I agree with Brittany. Commodity is definitely one investment area. But for me, because of my quantitative background, I will invest in quantitative CTA, which is a commodity strategy for quantitative capturing the volatility, not betting on the direction. Because directional bet is really hard to bet, and the volatility is very high. But given such a different geopolitical and high inflation recession scenario, volatility in the commodity market will persist. And so that's become the good opportunity for quantitative strategy to arbitrage and do CTA strategy. So that's number one. For primary markets, for PE funds, I would recommend, because of my background, because invest in fintech emerging markets. Because technology have a big use case in Asia and in Africa, Latin, and that also, I agree with Brittany, because that will bring the cash flow, free cash flow. That's a TD spirit. So even for primary PE funds, I think invest in those companies that can produce positive cash flow for long term. So I think fintech in emerging market, because it's such a young demographic, has a big use case, and that will produce high cash flow for long term. Yeah. So those two recommendations.
Thank you. I think you take any notes there? Okay, so we know that three of you actually had covered in the past of your professional experience, had covered a lot of different area countries, working there. So Yanan, when you share your big picture in Asia Pacific, you mentioned about in India and also Indonesia there. So forget about Asia Pacific. We are in Canada, okay? We are Canadian Chinese, then we are in Canada. So let me know if there any success you could replicate in Canada market or North America. If yes, what is it? If not, why?
Yeah, oh, that's a tough question. So I don't want to offend my Canadian fellows, still Canadian citizen. And no, I think, Canada is big on technology, well, in the Waterloo region. Waterloo is big on technology. And Canada has a lot of great technology, entrepreneurs. Don't mention Zhao Changpeng, right? CZ, CZ. We won't mention him, but we'll mention the Wei Shen, Big V, for the Yitaifang Ethereum. Yeah. So I think Canada is great on technology. So why not capture the dividend? So that's why I come to Canada. Always advocate, open our eyes beyond North America, use the technology well in the bigger emerging markets. For surfing, for us, we cover 10 countries so far. We do provide digital financial inclusion. The population in those 10 countries already double Chinese population, 2.5 billion. Of course, India is already 1.4. So I think beyond North America, technology has a big application. So I think for me personally, I think Web3 and blockchain, those technology are very hot, and actually Canada enjoy advantage for that. OpenAI is another case. It's actually University of Toronto. Our professor has this AI technology. Canadians are smart, right? So we should not look down on Canadian opportunities, but use the technology, go beyond, go to the emerging market. That's always you see, I can have a passion about emerging market because I think that's the high beta and the long beta for long term. But in the future, it's all about technology, how to enhance productivity, and that's where Canada can contribute.
Thank you, Yanan. That's the really fair comment. Okay, Brittany, given your experience for last 14 years in U.S. and Canada, you are best person to speak on North America. So can you tell the difference in finance behaviors in these two markets about investor, and what do they like to invest in? Why cause these kind of difference?
Yeah, I love this question actually, because there are so many similarities between Canada and US, for example, but there are still some differences. And so what I found, in my experience anyway, is that Canadians tend to have a little bit of home bias. So when we talk about asset allocation, we talk about the geography and the breakdown of where opportunities are in the markets. I think Canada does tend to favor Canadian companies, and so I echo that, where it's we have to look outside of just the four borders of Canada in particular, and I think there is still a lot of opportunity within North America. You have a lot of diverse sectors and market caps to invest in within North America, and so what I find is that there's more diversification by expanding outside of Canada. And so when you talk about large cap companies in Canada, that tends to mean the big banks. When you talk about large cap companies in the US, I mean, you can find mega caps and large caps across lots of different sectors. And so as far as similarities and differences, I'd say really investors should be looking at what is their diversification. Again, especially going into some volatile times, recessionary times, we want diversification. And so broadening outside of just Canada and really being open to different market caps within North America can offer a lot of opportunity for investors.
Thank you, Brittany, for the share. So, with Europe or UK for a while, right? So, do you compare these two markets? How does advantage or disadvantage for the Canadian investor in a global proposition of their investment?
Again, good question, Emily. So, like as Brittany was referring to, like Canadians have a strong home bias, and we actually recently studied the home bias across equities, and we are right now, as we speak, working on a research paper for fixed income. So we realized that the Canadians, like although their home bias is like about 52%, just over 52% compared to the market cap, on average they allocate about 52% to Canadian equities, whereas the most optimal weight to the portfolio, where the volatility essentially is at the lowest level across Canadian and non-Canadian equities, is at 30%. And so our view is that's the optimal. Now, comparison to the Europe, in Europe as well, there is home bias embedded. But at the same time, the advantage of Europe is like it's a very, a lot bigger market. It's a lot more diversified. Again, as Jianan was saying, like technology is the key factor for the future. So we also discussed that in our Ideas Multiplier paper published not too long ago. So with all of that, like Europeans enjoy the benefit of being at the forefront as well. Not as much as the US, but they have also a strong technology sector. So investors get advantage of that. But again, there are like home biases even within the European Union. So although UK is not part of EU anymore, but even when it was, we saw a strong home bias within UK versus Europe, and then within Europe, let's say France and Germany, each of the sub-markets, they have a strong home bias. So this is inherent. All major economies in the world, they do have this tendency. Investors have that tendency to prefer their local markets. So if I draw a parallel between European and Canadian and the U.S., I would say that the European markets are a lot similar in the sense of like having a home bias. They have similar access to technological advancements, the sectors, and because of their preference for the local assets, they rely on that. But at the same time, they realize that the U.S. is the largest market. They look at Canadian market as a diversifier with some strong names in the energy sector, in the commodity sector. So they do invest on the Canadian equities and bonds as well. So that would be my take, Emily.
That's great. I mean, we have knowing that our standing point and have a global view and a lot of like expertise sharing here. But I want to give a chance to the audience here. Do you have any question you want to ask for the panel? And I think we are good to take 2 questions here. Okay, we again from Equiton, our like title sponsor for the whole 3 days.
Yeah,
convention.
great discussion. I wanted to give a chance to everybody, but no one is raising their hands, right? I mean, in the name of, I don't really have a question. Well, it is a question, but in the name of discussing alternatives, right? Equiton, we are an alternative investment company. We are on the primary market. We are a primary REIT company. We specialize in Canadian apartments. So consider this also a soft pitch to all 3 of you, because I know Yanan Boshi, you do allocations, right? For family trusts and whatnot. TD, I'm also a TDer. I worked for TD for 3 years. Last position held, I was a retail investment specialist. So I'm very big on free cash flow as well. Equiton's apartment REIT, right? I'll give you 5 points, and this is my soft pitch. Risk-adjusted returns, right? We did a studies as well between the years of 1988 and 2022. We have but the private Canadian apartment index, this whole space, not our company, not our fund, but this sector. It's got highest Sharpe ratio across all the different asset classes that we compared. So that's 1. 2, low correlation, because again, in all the years of financial crisis, economic downturns, this index, this private Canadian apartment index, has never returned negatively since 1984. And that's because rental market in Canada, we all know it's a necessity. Buying a home might not be a necessity, but renting one, having a roof, right? That's a necessity. 3, free cash flow. We are in the rental market, so the fund, it's 100% in Canadian apartments. So it's got your revenue from rent minus all the operating expenses. We are a cash cow, and we do distributions monthly to investors at a 6 to 7% annual yield. 4th is this fund is, real estate related, right? When I was in my banking years, I worked for RBC, TD, and CIBC. Most of my banking years were about mutual fund advisory stuff, right? And so I think what we do here at Equiton, we are basically just combining the good of both worlds. It is a mutual fund trust, but the underlying assets is a market darling, especially in Canada, especially among our Chinese Canadian community. We all love real estate, right? So we are buying a fund. It's a securitized vehicle, but the underlying asset is what we love, real estate. And then finally, what we do, I think, because we are a private company, right? What we do is we are creating alpha. Yanan 博士刚才 just mentioned alpha and beta. We are creating alpha in a very big beta market. Real estate is beta, especially in Canada, because the population is growing so fast, and our supply, we all know this, it's very short. So that's the beta part. But in some economic downturns, single-family homes, the prices might be falling, like what we saw in 2022. But our fund returned 15%, and this is because we create alpha in this market.
That's not only a soft pitch; it's like advertisement here.
Well, yeah.
Thank you, Wei. I think yes. We had a lot of discussion today on the alternative investment. We have let the audience open eyes and exposed to all the different ideas, which is fantastic. We can have. I give you can I have one question to you?
Sure.
Yeah. And as the ending question to all the panelists here. So heading to 2024, we share a lot of insights of the overall investment landscape. Heading to that, you will speak on your start, right? I just asked all the panelists where's their start. So let us just, as an investor or as an investment advisor, I will always ask, what do you think the risk associated with that start you mentioned? Or the question to you as well.
Oh, sure. So when Bilal was doing his presentation, I was saying, personal view. I don't think in a recessionary environment. So remember, we all laughed at the saying "cash is king" for years because there was a lot of alpha in the markets, right? There was a lot of printing. The rates were very low, so all the assets were returning a lot. So people were laughing at cash is king. But I do think with a recession impending, cash is king again, and cash is not trash anymore. So to answer your question, for 2024, I think the risk is having too much leverage. It doesn't matter what asset class you invest in. And it's also, the risk is also, not being diversified enough. So the whole reason why we are talking about alternatives is hopefully, we can all diversify our portfolio, families, households portfolio. Just allocate 1% is diversification, right? So I think in 2024, we need to be focusing on, cash generating or income generating investments and be very diversified.
Thank you so much. So we're coming back to the panel. You have named your star in your, just now. So what is or maybe you give some advice on the risk control side. What is the risk alert or risk management should all the audience be aware of?
I think this has been said a few times in a few different ways, but I would say the risk is missing out on being diversified. And what I mean by that is we need to stay invested even if markets are volatile. We need to stay the course and not let emotions get the better of us. And so the risk of trying to time the market is an issue. You're never going to get, statistically, you're never going to get the perfect bottom to buy and the perfect top to sell. But the name of the game is to buy low and sell high over time. And so taking a truly diversified approach, however you define the 60-40 portfolio, when it comes to alternatives, there definitely is a sweet spot to help push that we call the efficient frontier further out to gain a better risk-adjusted return in your portfolio. So I think the risk is not being invested. I think the risk is not being diversified and completely missing out because you allow your emotions to get the better of you.
Great.
Thanks, Emily. So I concur with Brittany. I think it's one of the major risks not to be invested, to essentially staying on the sidelines. One of our research, again in 2022, it showed that there've been 9 different market downturns. We studied those, and 100% of the cases, there were a very few days when the markets bounced back from that. So the returns are concentrated in a few pockets of returns that happen, and markets jump during those. So most recent one I remember was due to the COVID-19 related market drawdown. And as soon as Federal Reserve, ECB, Bank of Canada, and other central banks, they cut interest rates, we saw a jump in the markets in a matter of days. So as Brittany was saying earlier, no one can time the market perfectly. You don't know when markets are at the peak or at trough. So stay the course. That's been our message for a long time, and we still advise on that. So you cannot time the market, you cannot control the market, you cannot control the geopolitics. As Yanan was saying, nobody knew Russia is going to invade Ukraine. But what you can control is having a long-term objective, define your goals, have a financial plan in place, and make your asset allocation when and use low-cost investments. Because, as I was saying earlier, investing in low-cost investments essentially keeps you away from losing returns to just cost of investment. And then to your question, Emily, on risk, again, we see that in terms of Canadian economy, the biggest risk is the higher real estate prices, the high leverage that Canadian households have amassed over the last few years, also consumer loans. On the US side, which also applies to Canada, is a policy misstep. So a Federal Reserve or the Canadian Central Bank, they essentially
keep the interest rates high for too long, that results into a deep recession and long recession. That is our major risk scenario.
Thank you, Bala. So, Yana, what is your final advice to the audience today?
Yeah, so maybe one comment, one advice. I think just one comment on risk with our friend from Equiton. I think risk is a very good alternative fixed income asset class. I come from Singapore, that's why I spend most of the time right now. Singapore is big on risk. And actually, the SGX, Singapore Exchange, listed risks, public market. So my comment is for Equiton without your product, I think location, of course. I think focus on probably university areas, student residence, apartment. That's the free cash flow. That's a focus on where the immigrants come. They will stay in Toronto, Vancouver. So I think that's where the cash flow comes from, right? So I think that's location. Second is see if you want to get listed as TSX. I don't know about the regulatory environment here. So risk listed on TSX can be, diversifiable to portfolio managers and also to retail investors. So that's just my free comment, free advice. Second, about risk. I think risk-wise, I will just point out near-term risk. I think next year, 2024, election risk. U.S. election, Mexico election, Indonesia election, many countries going election. So it will be a chaos. I think, who knows, Sleepy John will be back again? I don't know. I was just in the U.S. That's a big topic, right? The speaker already just get out, right? Get outside. And maybe Trump will come back. So I say Trump risk, right? So it's really chaotic right now, I think, near term. So I think with peace of mind, I think so far, I think Bridgewater has a all-weather portfolio, all-weather concept. So I think they did pretty well recently. So I think each one sitting in the audience should have an all-weather personal portfolio, themselves, so that we don't bet on near-term risk, near-term volatility, but hopefully we can go through the cycles, go through the different risk periods. So hopefully it's a diversification, all-weather type concept, alternative diversification as well. So hopefully that will give us a peace of mind, despite whoever comes into power, next year, 2024. So we'll watch. It's a drama, I think, next year. Lots of interesting will happen. Yeah.
Thank you, Yanan. 谢谢谢谢大家大家先给嘉宾一些掌声好吗？ Thank you so much for this morning. You spent like more than 2 hours, share a lot of like insights. 嘉宾把他们的家底也亮了，他们自己投什么，看好什么，最大的这个顾虑是什么？我们今天早上其实讨论了很多的东西，包括整个趋势，现在的这个流行的这个方向，然后在全球各个不同的地方那些投资者他们看好的是哪些？那么我们也见证了这个 AI 带来更多的这个便利，让我们更加可以跟这个融入这个什么牌子 ？Sorry， 我们见证了这个 AI 可以真正的改变我们的生活。那最后嘉宾也给了他们的中肯的这个建议和 reminder， 所以我相信今天大家是非常有收获的，和我一样。那 thank you so much for the time spending with us and with the audience. We know that and there's so many online to watching our program and sharing, and also a lot of sharing on the different perspective. I'm hoping that the audience and also the speakers will join us again in next CCFA forum. And thank you again for having a very good Friday morning. And thank you, Yanan.
Thank you.
Thanks. Thank you, Bala. Thank you.
Thank you,
Brittany.
Appreciate the opportunity.